Now, Investec, which owns a bank and money manager in South Africa and the UK, says half-year earnings fell by 0.7% after the rand weakened. The rand depreciated 16% against the pound during the period. Stephen Kossef is in the studio. And Stephen, before we go into your results, I want to congratulate you on being awarded Master Entrepreneur of the Year at the Southern African leg of the EY Entrepreneur of the Year Awards, which means, so you're going off to Monte Carlo soon?
In June.
In June.
Yeah.
Were you surprised at the accolade? I suppose that's a really bad question to ask somebody who's won an award. But it's a privilege, and you are one of South Africa's top entrepreneurs. Let's move on to your results. And looking at your investment and wealth business, it's doing incredibly well. Your asset management business is doing well, and so too is the bank in South Africa. Australia is where you've seen pressure, but you've taken that remedial action. And I suppose analysts have also given you a pretty easy time of it today because you set expectations in September.
Yeah, I think we gave guidance in September. Our results were quite a lot better than the, if you took the lower end of the guidance, it was at the upper end of the guidance. I think we try to crystallize what is burning us or what the drag is, where the drag is coming from. So we're very articulate on what the legacy is, both in the UK and the issues that we had in Australia. So people can now very clearly understand, what the drag is going to be going forward. And we have, as I said at the trading update in September, 2.5 out of 3 businesses performing very well. We just have to sort out the other half of the third one, which I think we're reasonably on our way to doing.
Stephen, in the long term, if you could ideally sort of draw an earnings pie chart, how would it look? I mean, what would the split be between specialist banking, wealth management, asset management, and other things, and also geographies? I mean, it's a difficult question, but ideally, where do you think, with the world economy where it is now and the world markets where they are now, where do you want to derive most of your business?
I think we want to maximise our earnings potential in each market that we operate within. So right now you're seeing quite a lot of income. The growth has been in the in the asset management and wealth management business. The bank has really dragged. We're starting to see the bank turn around. The South African bank certainly had a very good trading period after all the work that we've been doing there over the last few years. So from a mix point of view, I never want to really predict mix. So what we try to do was make our business a lot more capital light. And that's been what the efforts were in asset management and wealth management have achieved for us. But certainly, we want to grow the bank and without actually utilizing a massive amount of capital. So we're trying to build the transactional businesses, we're trying to build, the fee revenue, but still grow the bank. And we think that, we want to just maximize in each geography that we operate within and get the right kind of return. So it will be seasonal as to what comes from where.
If I can just ask one further question on there, like a typical analyst,
I've had you guys all day.
I guess the obvious question on everyone's lips is emerging markets. Just to, I guess, add on to Lindsay's question, is there any particular geographies that are looking interesting from an expansion perspective yet, or are you thinking about stuff further down the road?
Yeah, I think obviously we have an African strategy. That doesn't mean to say we're going to open up offices all over Africa. That's not what our strategy is. We can deal in Africa. We already manage a lot of money that's invested in Africa. We manage money on behalf of some of African governments or African clients. Clearly the corporate investment banking type businesses are active in Africa. But we don't need to open up anything on the ground in those geographies. We may have to put 1 or 2 people in time, but at the moment we can fly in and fly out. So we clearly have been looking at that. I don't think we have a base in Hong Kong, Beijing. We have a small base in Mumbai, where we look to get cross-border flow. So we're already established in the markets that we want to be established in. It's just, we don't want to build too much more infrastructure. We want to leverage off the infrastructure we have either here or in the UK.
Stephen, I know we've chatted about the rand before. You don't have a crystal ball, but it must be a hell of a headache for you. I don't know what your economists are saying in terms of where this rand is going right now. Again, it's spooked by this potential tapering where we can expect billions of rands to flood out of emerging markets. That's not a good scenario.
Yeah, I think, the rand will have to take the heat if you get a lot of outflow. I think there has already been outflow. as a consequence of the earlier comments, I think around May, June this year. But we can't manage the rand. We have to manage our business, and the rand will be what it will be. So we run the business in the domestic currencies that we operate within. We don't take much foreign currency risk at all, and we try and build the businesses in those economies. And over a long period of time, the rand will attract, in theory, back to the inflation differential. You saw the rand quite stable for a long period of time. The rand actually appreciated from early 2000s to last year. So, we're not going to try and manage it. We have to manage within the domestic environment. Obviously, it translates when we report in sterling into weaker results. That's why we're also given the rand results, because we pay our dividend to South African shareholders in rand. And I think rand investors need to understand the rand results. But
you can't manage. Sorry, Stephen. You can't manage the rand. You also can't manage the markets. Is there a danger here that you're just becoming a proxy for the market itself? I mean, I speak to Investec Asset Management people just around the corner here every couple of days, and I have to, without being sycophantic, I have to say your commentators are excellent and always well considered. But on the other hand, it doesn't matter how good they are. If the market goes down, then your earnings are going to suffer. Are you too skewed to the market? Are you not a bank anymore? You're just an investment manager. Are you just a fund manager?
I think you can see part of our businesses are exposed to the market, other parts are exposed to the real economy. The market and the real economy are sometimes out of sync. I think you might have made that point earlier in this discussion. So you're seeing markets quite strong, but domestic economy is quite weak. And so our banking businesses would be impacted by what's going on in domestic economies. Our wealth management and asset management business would be impacted by what's going on in markets. And as you know, they don't always move in the same direction. So yes, we have exposure to markets, but we have a lot of exposure to domestic economies.
We're moving on to SAB Miller now, whose half-year revenue edged up marginally to $17.6 billion as lager volumes rose by 1%. Pre-tax profit rose 7% to $2.4 billion. And earlier, CEO Alan Clark shared with us how the company's earnings were boosted by emerging markets.
Yeah, Africa's a fantastic story, actually. I mean, all across Africa we see good economic growth. There's been quite a lot of coverage, I suppose, in the recent while about a slowdown in emerging markets, but certainly within our footprint and geographies we don't see that coming through. So good GDP growth, improvements in disposable income, and of course consumers aspire to products such as those that we market across the African continent, and pretty much across our footprint we see good growth now and we believe into the future.
I don't want to labour this point, but Lindsay and I had a discussion again before the show and picked up on what Seppo was saying, in that here we've got a multinational company that is making up for the lost revenue out of North America and Europe, the developed environment, from those emerging markets. Yeah. So again, that emerging market, Africa, LATAM and Asia, strong in play. Certainly not on the horizon anytime soon.
Now, I think you've got to understand SAB is a consumer business, and the effects of the GDP growth and the uplift of people means they're going to spend a lot more. We deal at the upper end of the market, the high income, high net worth, and the institutional market. So we operate in those markets at the institutional market and in the corporate market, but we don't really have an offering in the consumer market. So it's a no-go area for us. But clearly, from a wealth management point of view, we already have African clients who deal with either our London or Johannesburg office, likely more to deal with our London office. As I said, we manage money for a number of large African institutions, and we invest a lot of money into Africa.
So you've cornered the part of the market that you want.
I don't say cornered, but we're active there. So we've got private equity stakes in Africa that hopefully we can benefit from consumer spending, backing some of our clients. So we participate in that part of the world, but for us to open up banks on the ground and think we can compete with a Nigerian bank that has a very big domestic platform, I think we're pipe dreaming.
Okay, here's a question for both of you. Seppo as an investment manager, and Stephen, you as a private investor, which I presume you are. Can you ever sell SAB Miller? It's everywhere, it's ubiquitous, it's in every territory, and every single year it grows its earnings. It's got fantastic management, and it may dip back 5%, 6%, 7% here and there, but on the other hand, you cannot get rid of this thing. Is this one of those shares that in 10 years' time you'll be passing on those shares to your children, your grandchildren, your great-grandchildren? Can you ever sell this one?
Stephen, let's go with you first.
Look, I think good businesses, when you sell them, you find that when you have to buy them back, you pay a premium to what you sold them at. And I think SA Breweries is one of those businesses. They've had a very successful strategy, starting out in developing breweries in the emerging markets and then being successful as well in developed markets. So as long as people are, seeing their incomes rise, which I think the world is seeing generally across the board, incomes rise, and that a lot of people are moving out of poverty, that type of business is going to do very well. So yeah, I think for the time being, I wouldn't sell them.
Seppo, the value manager in you, let's hear from you and how you're going to dissect SAB Miller.
Well, I'll start out in the manner that I start out when I say I don't like a stock, by giving credit to the business. I agree. I think it's a phenomenal business. I think there's definitive earnings clarity in terms of where they're going to derive their earnings growth going forward. However, I think everything's got a price. I do think that you can factor in a lot of this positive news in terms of the value of the business, and I think at these levels I'd rather be looking elsewhere in the market in spite of it being a phenomenal business.